The soy complex struggled again today. That pulled corn prices slightly lower and put a cap on buying in the wheat complex as all the markets try to sort out the supply side of the balance sheets. The cattle complex gave up mid-morning gains to close mixed, and lean hog futures held on to modest gains.
Live from the pre-Whipshaw Wednesday festivities via Farm Journal Studios, this is AgriTalk. This afternoon, it's a conversation with Dan Hueber from the Hueber Report. Directly following the news, Matt Bennett from agmarket.net. I'm handsome newsman Davis Michelson. And now, here's the host of AgriTalk, Chip Flory.
All right, Davis. Hey, thank you so much. Welcome to AgriTalk, everyone. Glad that you carved out a little bit of time for us, for Davis and me.
Yeah,
this afternoon,
us.
this Tuesday
This is
afternoon.
our time. This is our time. And we're glad that you
now
joined us. Huh?
Let's
our time together.
not get carried away.
Huh?
You know, I mean,
it was a Goonies reference, actually. Down here with Wild Willie. This is our time.
This is our time.
Here's a
I
quote.
get it.
Yeah.
We're looking for the treasure, man.
That's it. That's it.
it.
Chester Copperpot.
All right. Well, Matt and Dan are going to come along for the search, and looking forward to the conversations coming up with them. Lots of movement, I think, on expectations for the corn and soybean crops. I want to talk about that today because, yes, it's early August. Yes, it is a moving target on what exactly is factored into the corn and soybean markets. But we'll find out from Dan what he thinks. We've got some new yield estimates from Dr. Michael Cordonier that we're going to talk about here in just a moment. Mm-hmm. And it all kind of boiled, it all matters leading up to Monday's WASDE, Monday's supply and demand report on the 12th of August. And, and then heck, crop tours right around the corner after that,
sure.
Man. So,
and then the next thing after that is Christmas. So, we're getting somewhere.
It's got to freeze first, man.
It will. It will.
Okay. All right.
I think so.
Let's get started.
Indeed, the U.S. dollar rallied back after yesterday's drop, and that put a cap on buying interest in wheat futures. Spring wheat futures anchored the wheat complex once again. The crop was rated 74% good to excellent. As of August 4, that's unchanged from the previous week. Spring wheat harvest is 6% complete. That's a bit behind the 5-year average of 10%, Chip. That's by August 4. December soft red winter wheat futures closed higher for a 5th consecutive session, but it's been a slow grind to the upside. Dees SRW still looking at resistance at the July 19 high of 581. Yeah. Today, December hard red winter wheat futures were 1.5 cents higher at 578 1/4. December SRW wheat up 3 1/4 cents to 566 1/2. September spring wheat closed at 592 1/2. That's up a nickel today.
Yeah, Dees SRW 5 consecutive higher closes, but it's like 20 cents in that whole rally, so it is a slow grind.
Well, the condition of the corn crop was 67% good to excellent as of August 4, down 1 point from the previous week. For the first time this year, Chip, 10% of the corn crop was rated poor to very poor. That's up 1 point from the previous week. Still, Pro Farmer crop consultant Dr. Michael Cordonier of Soybean and Corn Advisor raised his national average corn yield by a half bushel to 182 bushels per acre. He sees the U.S. corn crop at just over 15 billion bushels. The weather forecast calls for mild August temperatures the next 10 days, although the pattern for the western belt is turning drier. Dees corn opened steady and spiked resistance at yesterday's high before setting back late in today's session to post a low-range close. September corn futures were 2 cents lower at 388 3/4. December corn down 1 3/4 to 405 1/4. March corn futures closed at 422 1/4. That's down 2 cents, Chip.
And we've been missing some demand news here lately. Nothing on the exports front. So giving it a shot of demand would probably help that market work back to the upside.
Well, Chip, November bean futures opened fractionally lower, firmed to within 1/4 cent of yesterday's high, and then turned downward to trade below support at 10.25 for a 7th consecutive session. The contract recovered to close above that level, but did settle in the lower half of the day's trading range. Bean crop conditions as of August 4 were estimated 68% good to excellent, up 1 point from the previous week. Pro farmer consultant Dr. Michael Cordonnier raised his bean yield estimate by a half bushel to 52.5 bushels per acre. He sees a bean crop of 4.42 billion bushels. September beans today, 17 and 1/2 cents lower at 10.14. November beans down 14 cents to 10.26 and 3/4. January beans closed at 10.43 and a quarter. That's down 13 and 3/4 cents, Chip.
Yeah, September soybean meal down $8.10 a ton. That put plenty of pressure on. And soybean oil traded under 40 cents early this morning. Came back, closed well above that, but still September bean oil down 24 points.
Well, Chip, just 45% of the cotton crop is rated good to excellent, down 4 points from the previous week. Cotton rated poor to very poor is 27%. That's up 3 points from the previous week. December cotton today was 48 points lower at 67.30. This has got to have something to do with Hurricane Debbie, perhaps, Chip? Excessive rainfall through the region there? Or would that have been before this? I think that was after this, wasn't it?
Yeah.
Didn't catch it. Interesting.
No.
All right.
Yeah.
Well, early upside momentum in the cattle complex drained out of the market through the session. A $2.25 drop in heavyweight choice graded boxed beef anchored prices. That's despite strong movement. October futures posted an inside trading day with a high range open and a mid-range close. October fats up a nickel today, 179.05. September feeders 67 and 1/2 lower at 240.57 and a half. And October lean hog futures closed the day in the middle of a week-long sideways trading range. October hogs today 67 and a half higher, 76.40. Chip.
All right, thank you very much, Davis. Matt Bennett, agmarket.net. How you doing, Matt?
I'm doing good, buddy. How are you doing?
I'm okay. I want to ask you about the corn crop, but first, what is wrong with this bean market, the soy complex? It just doesn't want to participate in much of a rally.
I mean, I think there's a lot of things going against it, Chip. I mean, bottom line is when you look at the world and U.S. stocks, it's just a tough row to hoe trying to come up with a bullish story. I mean, they're talking, of course, massive crop out of Brazil again this next year. We don't know what the weather's going to do, but dadgummit, I mean, they keep planting more every year, so they don't need perfect weather. I mean, it's you're going to be awash in soybeans if the USDA is even close to correct. About a 27% jump in stocks worldwide over the course of the 2 marketing years that they post. That's just a lot of beans. And so I think the weather, they look at the weather and say, geez, most of these guys and gals only need one more rain, maybe. I mean, you talk to most growers, they're going to say their beans are waist to chest high and they're loaded with pods. I know it's not everywhere, Chip, but I'll tell you, I've talked to a lot of folks in the last week or two, and people feel really good about not just the corn crop, but the bean crop as well.
Well, yeah, and that corn crop expectation, it feels like it's inching even higher, doesn't it?
It does. I mean, I'll tell you, Chip, it's really hard for you to say that you don't think this corn crop's going to be good. I mean, let's just take a look at, for instance, the drought monitor. I mean, if you wanted to have a trend line yield or better, just throw a drought monitor out there that looks like the one we've got this year because bottom, right? I mean, there's just nothing out there. I mean, there's no color. So, yeah, I mean, I think you got a huge crop on the way.
All right, buddy. We'll see. We're going to have to wait a while before the combines roll, but we'll try to get a look at the crop on crop tour as well. All right, Matt. Thanks, buddy. We'll talk to you later.
Absolutely. Thanks, bud.
All right, man. Matt Bennett, agmarket.net. We're going to talk more about the supply side of the market. We've got Dan Hueber, the Hueber Report, coming up next on AgriTalk.
Do you suffer from talking on the radio phobia? No problem. Send us a tweet at #AgriTalk. Summertime talking baseball now. For the ladies!
Cubs are still 5 games under 500.
Oh, are they? Okay.
Yeah. Yep. 5 games under 500.
You can win from there.
Well, should we take a quick look at the American League?
Let's check the standings.
Okay, where are the Royals in the American League?
I think we're looking at the number 3 wild card spot is where we are right now. I'm not sure if that's right or not.
All right.
I think I read that over the weekend.
Yeah. Here we go. The Central. Yeah, KC 63 and 51, 5 games back in the Central. Cleveland Guardians 67 and 45. What in the world is this?
What do you got?
What? See, I checked this earlier and I saw the same numbers, and like I just said during the break, I thought the whole internet was busted when I saw that the Chicago White Sox have put up a 27-88. That is 61 games under 500.
Yeah.
61. They've lost 21 in a row.
That's rough.
Unbelievable.
We're only 36.5 games back.
Of what? I got you 41 and a half. You're 36 and a half games out of the wild card.
That's it.
Yeah. That's what I meant to say.
That's it.
Yeah, 41 and a half out of the Central, the AL Central. Hopefully Dan Hueber is not a Sox fan and is a Cubs fan, because he joins us right now. How you doing, Dan?
Very well, thank you. And yes, I'm a Cubs fan, but
good.
But you have to give the Sox credit there. That tied the American League record.
Well,
the number of straight losses.
It's a record-breaking season. Yeah, it's a record-tying season for them, I guess.
That's not good enough. We're going for all time.
So, that's right. Might as well go for the record. Exactly.
Instead of just a tie, doggone it, there's nobody worse than us. That's what they're trying to do. This is going to be the worst baseball team in the history of the major leagues. It's unbelievable. And they didn't want Ozzie Guillen. What does that say about Ozzie Guillen?
Well, true. Although, you kind of have to think, there was a lot of talk in the last year that Reinsdorf wants to move to another city who will be more favorable. Well, and of course, what better way to do it than lose your complete fan base than the one you're in. So it's, somebody will want him somewhere. So, right.
Wow.
Right.
Wow. Unbelievable. How's it going, Dan?
Very well. Thank you. How about out in Iowa? I think you probably look about the same as we do, which is great.
Yeah, we had some rough weather up in the far northeast part of the state last night. Okay. But for the most part, here in just north of Waterloo, Iowa, we might have missed the last couple of rains, but things look great. Things look really good right now. So hopefully it'll shape up.
I have to say, we really, right here in DeKalb County, northern DeKalb County, we've never had, what you would say an overabundance of rain. You can go 20 miles north or south, and that has not been the case. But boy, when it needed, they always came. It was just the right amount. So yes, it's probably one of the best. Well, again, I guess everybody's talking about that. We're looking at potential for record yields here. And boy, I don't see any reason why that won't be the case. So.
All right, boy, you guys in DeKalb County always living the good life there.
I tell you, we live in the dream here. That's exactly right. Yeah.
So the volatility has come back to the grains. I'll just ask you just a very simple question. Is it good or bad at this time of the year that the volatility has come back into the grains?
Oh, I think good. I think volatility is good at any time. And I think at this point it probably is reflective of a market that's kind of sorting itself out. And and again, I not that we're necessarily quite there, but I guess I really believe we're in that final stretch. You usually get some pretty good volatility as you hunt for that ultimate low. Unfortunately, then you normally go stagnant. It's not like you turn around on a dime and skyrocket out of here. But yeah, as you squeeze the last of the longs out of there, and in the case, I think we're also systematically pushing grain out of the farm level to make room for the new crop. So that's going to increase that volatility a little bit. But here again, I think that's really indicative of a market that's in that final give up stage. Everything's bearish, and markets always bear. They bottom when they're the most bearish. They don't bottom because there's still some bullish news that really makes them skyrocket out of here. So
yep. When I'm looking for that bullish catalyst, I keep coming back to the idea that I don't know if there needs to be a fundamental change in the outlook for the market to get a rally if the funds just decide it's time to get out of those short positions. That's kind of my default attitude in corn right now, and I don't know if it's right or wrong.
Oh, I tend to be the same way. Now, granted, we did not really see, and they had no reason to scare out. Normally, May, June, you'll get some of that short covering by the funds.
Mm-hmm.
This year, that really wasn't the case, and of course, then after July 1st, piled on to take us up to record short positions. But here again, usually by the time you get up to September 1. They've had enough of it. They know that we're at that seasonal time of the year where the supplies are never going to be bigger than they are today, and really see no or very little reason to hang around on the short side at this point. So yeah, I don't see them immediately turning around here and start covering shorts. But boy, we're within a 30, 45-day window of that happening. So
okay, so at 4:05 in Dees corn, and just a few days ahead of the August supply and demand update.
Sure.
What is factored into the corn market right now?
I think the numbers that were tossed around earlier, what was the government on the land? They were 181 last month. So sure, I think 181, 182 is pretty well factored in at this point. Okay. Realistically, any economic model, as you continue to increase the supplies and increase the use, just the decrease the price, every economic model is going to boost usage some. Mm-hmm. Now, does that result in even at 182, does that result in a huge increase in the ending stocks? Percentage wise, no. And again, and I think there's where you start dealing with percentages right now. I mean, let's say I believe we're within 5% of a low. Well, okay. Reverse that. If you were within 5% of a high, would you be happy to sell everything?
Yes.
Of course you would. So if you're, just conversely, if you're within 5% of a low, why do you want to be bearish any longer?
Okay. Yeah, that you're making an awesome point right there, because you cannot get more bearish as the market goes lower. Well, we've seen the D's contract spike that support at $4. If a $3 handle for a short period of time, maybe that satisfies the sellers in new crop corn. I don't know. It sure might.
Oh yeah. Again, I think they're back to the point they have to look at it in a risk reward, risk perspective as well. I mean, is there really much of an advantage to continue to stay short at this point in time? And I say each day we push lower, that diminishes every time. So
right. So USDA from June to July in the WASDE reports added 150 million bushels of corn demand. Like you said, the expectations are that if you increase the supply, you're probably going to find some place to increase demand.
Sure.
That 150 was on the old crop, but it's holding steady into the new crop year as well. Can we build on that new crop demand in the year ahead?
I think granted, the most obvious place where you might be able to do that will be in the export scene. A few minor things happening. I shouldn't call them minor, but I mean, there are little adjustments that are happening in the world scene. Number one, Ukraine this week is talking about a 6 million metric ton reduction in their crop. And there's really our main competitor when it comes to the world markets at this point in time. And you kind of hate to always fall back on China, but here again, China, has certainly been having some readjustments domestically, particularly in their hog numbers. Well, that's been factored in there right now. I think they recognize bargains, they probably more so than anybody else out there. So I think we probably could see China back as a little more substantial buyer than maybe anticipated at this point in time. Are we talking anything more than 50, 100 million increase? I think that would be pretty optimistic to think even that. But still, it's again, lower price. Yeah, and well, I mean, not belittling anybody, but people tend to, when prices are cheap on inputs, you tend to maybe get a little bit haphazard with some of the diets, and throw in a little bit more, depending on the relationship with soybean meal, and might toss a little more corn out there just because you've got it. It's cheap.
Yeah, absolutely. There's no question about that. All right, we are in the middle of a conversation with Dan Hueber from the Hueber Report. We've got to talk about supply side of the soybean market. And then I got a question in on Twitter talking about, is it going to be a recession, or do we or do the tight supplies influence that market the most going forward? We're going to talk about that next.
Let's go to the markets page at profarmer.com and check today's closes, where December HRW wheat futures were 1 1/2 cents higher at 5.78 1/4. December SRW wheat up 3 1/4 cents to 5.66 1/2. September corn futures were 2 cents lower at 3.88 3/4. December corn down 1 3/4 to 4.05 1/4. Let's see, soybeans, here we go. September beans, 17 1/2 cents lower at 10.14. The Novi contract down 14 cents, 10.26 3/4. December cotton today was 48 points lower at 67.30. On your livestocks, October live cattle up a nickel at 179.05. September feeders, 67 1/2 cents lower at 240.57 1/2. October lean hog futures today, 67 1/2 cents higher at 76.40. Visit tryprofarmer.com for more. Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. Knowledge is power. We're here to charge your batteries. AgriTalk.
Welcome back to AgriTalk. I'm Chip. We are in the middle of a conversation with Dan Hueber from the Hueber Report. Kind of talked through the corn situation there in the last segment. I want to move over to soybeans. Dan, and I'll start with the same question here. Here we are, early August. We've got November soybean futures at 10 1/4. Call it. I mean, they've been on both sides at 10 1/4 for 7 consecutive days now.
Right.
What does that market have factored in as far as supply side?
I mean, very similar to corn. Again, when you think about soybeans, when can you actually think of the last time we had something positive for the bean market?
Yeah, no, it's been tough.
I mean, the export market's been dead. I mean, the growing season's been great. So, I mean, we just keep piling on and piling on and piling on. Again, which is typical of a market that's headed for a low. I did, in case you're curious, while we were on break there, I saw some surveys for their next week's report, average trade guesses. They have beans at 52.5, corn at 182.2. So, that would tell you that, the market's, very well prepared for record yields come next Monday. So, why not, when you're this close, why not take a little trip under $10 just to say you did it? But, here again, I just don't see what the incentive will be to push beans below that $10 mark and hold it at this point in time.
Right. Okay. So in corn, you said we're within 5% of a low. Do you kind of feel the same way about beans?
Oh, yes. I mean, like you say, I think, yes, we could maybe take and again, I've been kind of shooting with, interesting, back up just a little bit. A week ago yesterday, I'm sorry, beans gap lower. And they tried 2 or 3 times to try to get back above that gap. Never quite have just enough oomph to make that happen. So, that would kind of seem to suggest, all right, we've got one more stab to the downside just to see if we can go to lower lows. And like I say, maybe we get 990, I guess, extreme 975 in November beans. But, at this point in time, I guess I just don't see us deteriorating any further than that.
Yeah. If I remember right, is that gap between 44.5 and 45? I believe it is. I got it now. Low on the 26th at 10.45, high on the 29th at 44.5. So that's it. You got to pay attention to stuff like that because that's been a cap on the top side of any kind of an upside recovery attempt. Yeah,
exactly. You've got a couple. Your 13, 20-day moving averages are right there at 10.45 at this point. The gap itself. I think gaps are useful measurements if they're coming off of any kind of move. All right, it gives you a downside projection of like 10.02. So it's not like it's a major wash there to the downside, but here again, like I say, we could flirt with that $10 mark, and psychologically, probably a pretty good spot to shoot for.
Right. Soybean oil traded under 40 cents today, Dan. It's been a while.
There's the sick one there. Yeah, absolutely. So,
Why?
and of course, here's where you go back earlier in the year, and of course, I think the trade was really positioned for oil to be the kind of the salvation this year. Nobody thought meal demand was going to be too big on the export market, and then the reality hit that we're finding all this used vegetable oils coming out of restaurant trays and this kind of thing that really kind of displace the demand for soybean oil from domestically here, and I think psychologically that just let us down all the harder here. Once again, granted, it sounds like a broken record here, but I think looking that we've been really trending lower since midsummer. Last 2 days pushed into new lows for the year. Sub 40 cents in December oil here for the first time in a couple of years. So yeah, I think we're bringing all we can out to the downside. Could be a couple more cents to the downside. I mean, there's certainly nothing at this point that would suggest we've done it. We haven't stabilized in the least bit. But here again too, psychologically, that was the one that I think that was hit the hardest this year, just because of the disappointment and what we thought what might have been, and just never materialized.
Okay, so on the crush demand and the use of bio-based diesel for sustainable aviation fuel, for renewable diesel, for all of that, where are you on the level of expectations? Have you lost hope for that? You still have hope, or you fully expect it to happen?
Well, I fully expect it to happen. No, I think it's been pushed down the road. It's all it really came to. And again, I would equate it not unlike the whole EV movement in this country. Certainly, yes, we're probably going to see more EV vehicles as time goes on, but boy, we got the cart so far ahead of the horse that there had to be a correction in there, and I think the same thing happened in the soybean oil, the renewable diesel, renewable fuels. Period is that expectations were high, were great, and we just got ahead of ourselves. It will ultimately develop. I think it has to develop. So it's when it comes to energy. And we can talk, granted, we're net expert of energy right now. I mean, we're producing more oil than anybody else in the world, but I think we can never really lose sight of the fact that it's still a finite product, But every time you have one of these alternatives that comes up, it extends the life of petroleum, the petroleum we can extract from here. So they're good things, but sometimes we get too anxious.
Yeah, and as long as we're talking about energy, boy, the happenings in the outside markets, I'm looking at the Middle East and what might happen in the Red Sea, because the Red Sea is an energy issue for us, right?
Oh, I mean, a lot of things have got to move through there. So absolutely.
Yeah.
So, but again, I'm granted, you go to the gas pump right now, it certainly doesn't feel like we're looking at any kind of relief at the pump.
No.
But boy, when you look over the crude markets, we're as low as we've been for the last couple of years. So it's
exactly
that comes. And granted, I know the crack. They're probably cracking or getting ready for the heating oil season and that type of thing. But it's here again too. Granted, it can be kind of irritating. You don't begrudge anybody making a profit, but oil companies are doing quite well here at this point in time. So.
Yeah, I did some driving around last week, and I saw a lot of E10 in the 330 to 350 range.
Sure.
Dan, I mean, it's not cheap. That is for sure. It is not cheap gas right now, which is just making things a little more difficult at the meat counter, at the grocery store, and so on. So, hey, you know what?
You didn't come to Illinois. We're 380, so.
Yeah. I was in Illinois for about 5 minutes.
That's right. Then you went back to Iowa to fill up.
That's right. Okay, got an interesting question on X yesterday afternoon, and I'd like to discuss it with you here in the last couple of minutes. The question is, in the cattle markets, will the cattle shortage trump a recession, or will the recession ultimately trump the shortage and drive cash down?
I'm going to lean to the second. And again, I mean, I have been surprised that the cattle market has consistently held in as well as it has. Maybe it's just one of those things that's turned into, this is how we treat ourselves in this country. That we still enjoy a nice cut of meat or a little extra hamburger or whatever the case may be. But when you start looking at the reports from and specifically, kind of the recession, what you consider recession-proof industries. We're seeing a slowdown in consumer spending. McDonald's, places like that are absolutely seeing a slowdown. And granted, there's a lot of competition in that scene, but yeah, I think we've kind of hit that wall. And if you really look at the cattle market, it's held in well, but it's really not gone anywhere for the last year.
Right.
And it's granted, like I say, that demand is held in there, and of course the low numbers, are doing everything they can to support that as well. But yeah, I think there becomes a breaking point, particularly if we start to see, really just in the last 2 to 3 months here that we've seen unemployment begin to creep higher. Yeah. And if that trend continues, I don't see how we can't start backing off on demand at that point in time.
Yeah, I'm with you there. Now, can that turn into some additional demand for pork and maybe help this hog market out a little bit, or are those two not interchangeable?
Oh, I think they're interchangeable. Certainly. And again, I guess I've looked at pork, and pork has been, anything but seasonal trends this year. I mean, we had a dump in the summer when we usually should have a rally, and now we're seeing a rally as we come into the fall, which is usually we're looking at the opposite side. So no, I when I look at the even over the short term here, I'm pretty impressed with the action of the hog market. I think it's showing us that it's got a major bottom in there, and that our seasonal bottom came in 2 or 3 months earlier than normal, and I think it's got a little brighter future if we look out into 2025.
Yep. Yeah, I talked to a few cattlemen over the past few days, and none of them are happy about hedging or risk management prospects because of the big premium basis that, the cash trading well above the board right now. And that's a tough situation, isn't it, Dan? It's hard to use the tools.
Yeah. I think when you look at tools in this situation, you basically just got to look at a general sense of downside, disaster protection, just for lack of a better word. So, you're not going to have what we would consider a traditional hedge because there's a disconnect between those local markets and what the futures are giving us.
Yeah. And there's supposed to be convergence that happens in that market.
Well, and on the final day, I guess, if you can deliver them somewhere, do the cash settlement. But
that's right.
That doesn't have to happen. Yeah.
That's right. Dan, it's always good to talk with you, man. Thank you so much.
Likewise. Yeah, thanks very much.
Dan Hueber, the Hueber Report. All right, I want to talk a little bit more about that question that we got on Twitter when we come back. Davis and I will be right back on AgriTalk.
Chickens have come home to roost. Find out whose fence they're perched on today on AgriTalk. Welcome back to AgriTalk, everyone. Your pal Davis Michelson here, along with Chip Flory, the incomparable Chip Flory. Isn't that what they say? The incomparable Chip Flory.
No.
No?
No. No. I don't hear that.
Are you suggesting it takes a broadcast professional to say words like that?
It must.
Incomparable. Yes.
I'm
you mentioned
it for myself.
Was that Big Apple Joe going to chime in?
No. That was me.
All right. I thought my Joe alarm went off for a second there. Okay. You had mentioned the Goonies earlier today. Have you seen Corey Feldman? Man, are you watching this Corey Feldman thing at all? It's not a new thing. He's been out on tour. He's got a band. He's convinced that he's going to be a rock star one day. Have you seen any of this?
No. Is it any good?
Opinions are split. Okay, I'm going to be brutal. Okay, I'm just going to be honest. Like someone, I would hope someone would be with me. He can't sing, he can't play, he can't dance, and yet he's on tour with his group is on tour with Limp Bizkit. They've got a whole summer series metal mayhem kind of thing going. You know how they do.
Yeah.
And somehow Feldman's band is involved in there. So clips of his show are showing up here on Facebook. And I don't know, man. It's like you want to pull for the guy, I appreciate that he's still trying to put himself out there. I mean, he's our age, dude. He's our age, and he's up there with his shirt off. I don't take my shirt off at shows anymore. Them days are gone. Long gone, son. But he's out there, and so I'm torn between, God bless him for him. Still going, or come on, dude, let somebody who can play have your slot. I don't know.
You be you, Corey. You be you.
I love that. Thank you for that, Chip. I needed that. I needed to hear that. Yeah.
All right.
Yeah. Absolutely.
So,
there was a bit of a hiccup in the bottom of the hour quotes read because I'd highlighted something from the news copy that I wanted to bring you back to, and I know there's something else you want to talk about.
Right.
We'll get there.
Okay.
On soybeans, okay? Mm-hmm. The November contract recovered to close above a support level, but did settle in the lower half of the day's trading range, which is a greater weight, a greater negative on the market.
It enforced support again. I mean, you can make the argument that we are knocking at the door of support at 1025 too many times, and eventually somebody's going to open the door and the market's going to slide right through it. And like Dan said, what the heck, we're close enough to $9. Let's go down and put a 9 handle on it at least once and see how the market responds to that.
Yeah.
So I think, but it is reinforcing the support at 1025. When you spike it and then come back and close back on top of it, like we have been doing, that's hard to argue that we are building a layer of support at that 1025.
See, I feel like that sentence there has two possibilities in it. The contract recovered to close above 1025, period. Mm-hmm. The contract did settle in the lower half of the day's trading range. We've used that as negative news in the past. I know we have.
Oh, yeah. Well, it's an indicator that you lose momentum throughout the day. Yeah.
So you're telling me it's just going to be tough to figure and volatile. Is that where we're arriving? Tough to figure and volatile in the bean market?
Well, you get a close below 1025, and I've got to check and see if we have closed below 1025 in November beans. And if we have, it's only been once or twice. Yeah. But, we have closed below it. Actually, we've closed below it 3 times. We closed below it 3 consecutive times.
Whoa.
But we did not get back-to-back lower closes below. Now, there's your real indicator.
Okay.
Back-to-back lower closes below support at 1025 would be negative for that market. I don't think there's any question.
Okay, very good. All the talk of Corey Feldman. I forgot what you wanted to talk about. You had something all lined up. It's probably good.
Question, the question that came in on the cattle market. In the cattle markets, will the cattle shortage trump a recession, or will the recession ultimately trump the shortage and drive cash down? It's a great question.
It is.
It's a great question. I'm going to give a tough answer, and the answer is yes. To both questions. Now, here's why. It's a timing issue. Demand destruction is going to happen, and that should happen first. That, in my mind, is the step that I've been waiting to see happen, is the demand destruction. When that happens, your cash box beef market should fall apart first. Here it is at 315 or whatever it was this morning, but around that 315 on the heavyweight choices. So that is not happening. You would think that it would fall apart on the demand side first before supply has another wave of influence on the cattle market. The reason I say that is because how long have we known about tight supplies? It's not like all of the sudden the cattle market or the cash market or packers are going to be surprised by the tightness of market-ready cattle supplies. The next thing that should be a surprise, therefore a market-moving feature, would be some demand destruction. So first things first, demand destruction, pull the cash market down. Next things next is all of the sudden you've made that heifer worth less, not worthless, but worth less, in the feedlot, and maybe now all of a sudden she's worth more out on pasture. Now, if that is the case, we start to move some of the females out of the feedlot and into the breeding herd, you pull down your beef supply one last time, and that is supposed to sock in your cycle low. Now, I say that, but I think over the last 2 10-year cycles, we've watched the destruction of what was an extremely reliable cycle that has just been busted up because of drought and demand being much more resilient than what we have anticipated. Now, Dan hit me with a real quick email during the break there. He says $2.99 a pound, 80/20 at Fairway grocery store, and $12 ribeyes might be loss leaders to get people in the door to buy $8 bags of Doritos.
Oh!
It's a good point, dude. It's a good point. Come back tomorrow morning. We've got Dr. Jim Mintert from Purdue and a Farmer Forum here on AgriTalk.
Someone broke into my car and left 2 Corey Feldman tickets.